Let's get down to business. The Trump administration has made a huge deal with one of the president's dearest friends. A contract has been signed between Larry Ellison's software giant Oracle and the Pentagon. It is a deal worth $7 billion over a decade. According to the Defense Department, Oracle software will be used in data centers for the military. The department also notes the deal will save American taxpayers over $400 million. Larry Ellison, of course, has been a longtime supporter of the president, donating at least $45 million to his most recent presidential campaign, and was one of the very first guests at the White House in Trump's second term. Charlotte Howard, U.S. editor for The Economist and host of the Checks and Balances podcast, is here, and my dear friend Dan Nathan, co-founder of Risk Reversal and a CNBC Fast Money contributor. Your reaction to this deal with Oracle? The White House and Oracle will certainly say this is a competitive process. They're a fantastic company. Nothing to see here.
Well, if you go back to the financial disclosures that we were talking about last month, you have a series of events that are in sequence that if an objective person would look at them, you'd say at least there's an appearance of a conflict of interest. And if you think about historically, the norm was there should not only not be an actual conflict of interest, but there shouldn't even be the appearance of one. And now you have, whether it's this deal or you can look at a number of other decisions by different parts of the administration, and whether it's the FTC, the FCC, you have situations where there is at least the impression of a cozying up between a business interest and then a policy decision taken by a branch of the White House.
And it works for them, right? Yeah. Not just Larry Ellison. You could look at Elon Musk. You can look at Mark. Look at Jeff Bezos. In Trump 1.0, Jeff Bezos was a target of Donald Trump, right? He was even going after Amazon and the Postal Service, all of it. They have all done the math and said, better to be friends than foes. And it appears to be working for them, but what does it mean for the American people?
Yeah, so Larry Ellison was always in this camp, right? And, this deal is a total joke. Like, there's no net new revenue. What it means is they're consolidating their existing contracts across a lot of parts of the DOD. So if you just read a little bit of the print, you don't have to go to the fine print, okay? This is a $7 billion deal that consolidates a lot of revenues. In the first 5 years, it's about $3 billion over the first 5 years. This is a company this year is expected to do $70 billion in revenue. It's basically a rounding error. So these are the sorts of announcements that guys like Larry Ellison, who've been in the president's pocket for over 10 years, they're happy to get. Maybe it helps their stock price. The stock is down 65% from its all-time highs in September of 2025. It's shocking. These guys were Johnny-come-latelys to the AI train. They had to raise a lot of debt to kind of build out this infrastructure for OpenAI. It is not working. The market participants do not think it's likely to happen. So Larry Ellison in September went from being one of the richest men on the planet to just, also Rand owning about $125 billion worth of Oracle stock.
But then what's the point of this deal?
Headline. I think a lot of it has to do also that Larry Ellison has secured this Paramount Warner Brothers deal. His son obviously runs Paramount. He has personally put up $45 billion or pledged that. That is in his stock in Oracle. So if you just draw a through line here, they really need to get things going at Oracle because that financing is really important. Now, the other three financiers, ready for this? Saudi Arabia, UAE, and Qatar. Just think of that group. What a motley crew of, folks that Trump have right in their pocket. So maybe there's another, plane out of it for somebody, coming from Qatar or something like that. But the deal is a bit of a joke.
Meanwhile, the Paramount Warner Brothers deal is now delayed, or the merger, until 2027. What do you make of that?
Well, so historically, antitrust enforcement was largely a bipartisan endeavor. And now you see this fracturing, right, where you have the DOJ having approved the deal in the middle of June, and then exactly a month later, 12 attorneys general going and suing to block the deal, all led by Democrats. And this is the attorneys general, Rob Bonta in California, pointing out that this shouldn't have been approved, that Ellison was cozying up to the Trump administration in order to get it through, and that the Democratic attorneys general are looking up for the American people. They say it's political by the part of the Trump administration. It also is a political gain for the Democrats, right, to stand in front of the Hollywood sign, as Rob Bonta did, to announce this action by 12 states. He wants to portray the Democratic states as standing up to billionaires. He talked about it being an issue of affordability. So on both sides, you see this sort of increasingly partisan nature of antitrust enforcement. But they have been effective. The Paramount team said, we're going to delay. We're going to take this to trial. It's the fastest way to get this deal through. So that greasing of the wheels that might have occurred on the federal level is now being stopped by the states.
But of course, increasingly partisan doesn't serve the American people. Let's change topics. Markets are already up almost 600 and we're 3 minutes into the trading day. But specifically, the price of oil is actually down after just a few days of no strikes. Are you surprised that they're down? I mean, yes, there's been a somewhat of a pause, but we are really far away from an actual deal with Iran.
Yeah, no doubt. It hasn't gotten back all of the gains over the last 2 weeks since the bombing started again. I think a lot of market participants are probably going to stay on edge. I think things got a little bit too complacent in the days or weeks after that MOU was signed in mid-June or so. So when I think about the price of oil, I think about, what the Fed is going to do this week. The Fed chair is going to have his second meeting, and they're going to talk about interest rates. So when you think about, the price of oil, you think about higher interest rates. Mortgage rates are that high in 52 weeks, if you think about that. So if the affordability thing is a question, I just think you got to wrap all of that together, because this deal, whatever happens, there's no deal. Whatever happens to kind of get a ceasefire going again, I think that a lot of market participants are going to actually put a premium on markets. This is just a bit of a knee-jerk reaction. So I'd be really surprised if it's something that kind of builds some steam over the next few weeks until we see some sort of agreement.
But we don't have an agreement, and things are getting more and more difficult for the United States to try to keep the price of gas down, right? We're tapping into our strategic oil reserves. They're now at their lowest level they've been since the early 80s.
Yeah, there's not that much wiggle room here. And I would add to the list of factors that markets will be keeping their eye on the Houthis, right? So a key exit route for oil out of the Gulf has been through a pipeline to go to the Red Sea. And the Houthis are now saying, thanks, but no thanks. We're going to intervene there as well. And so you have not only the increased volatility around the Strait of Hormuz, but also this other crucial exit route. And I think both of those things together add enormous uncertainty to whether the oil price could remain depressed, as you've seen recently. I think we're going to see a bunch more of volatility going forward.
Well, we'll be watching. There we go. The market is now up 600. Thank you both for joining us this morning.